All right. Okay, we're all good to go. We're live on Facebook. We're recording. I go away for a couple weeks. It's been a while. It was we were off for Labor Day, and then last week I was on vacation, and yeah, it's been a while. So
Yeah,
I go away for 2 weeks, and I forget how to do this.
that's all right. We're back. We're live. We're ready. We're hot.
We're at. So you want to, before I get into my charts and graphs, Wes is not joining us today because he's actually out with an out of town buyer, and he's out showing property all day, and hopefully by the end of the day,
Great.
yeah, he'll have a sale. We hope, but we'll see. We'll see. But that's a great thing about out of town buyers is they come in and you do this marathon tour, and usually at the end of it you might look at 20 properties in 2 days or something like that, and but hopefully at the end of it you've got a sale out of it, so it's a beautiful thing. But I mean, there was definitely kind of an end of the summer doldrums, but
hmm
um, it's starting to pick up again. What are you seeing, Terrence, in the market?
Definitely. You are 100% correct. There was a stretch of a couple of weeks there where my phone was not completely dead at the end of the day, which is strange. But over the last week, I have actually had to do a midday charge. So that makes me happy.
Oh, wow.
Things have definitely picked up again. I mean, it's, like you said, end of the summer, people want to take a few last minute trips out west or, wherever they go. And, before the kids go back to school and all this jazz. But now that, we're 2 days away from the official start of fall, but now people are starting to really get settled in. And it's cyclical, as you know, it happens every year. We'll have a couple of months of just being slammed, and then people will take their foot off the gas a little bit for the holidays, and it'll pick right back up again. But we are in that period of time where, September, October, November are going to be busy.
Yeah, it's there's always kind of a window here between the end of summer doldrums and Thanksgiving, where we have a little bit of a surge. It's not usually quite as crazy as the spring market. Spring is always traditionally, barring other unforeseen circumstances like a pandemic or a market crash,
Right.
something like that. Yeah, I think this year was also particularly difficult for back to school. I think people are trying to figure that out, and I mean, thank God I don't have kids I'm sending back to school, but
Me too. Yep.
it's just been so. I think that really put people behind the eight ball with trying to sort that out and figure out what they're doing about that. But yeah, I mean,
Sure.
back to school is tough anyway, regardless, but particularly so now. But I think that I was looking at the charts and graphs, and unless you have something you want to share with us, I'll go ahead and pull those up.
Yeah, thankfully things on the lending front have been pretty even keel, which is awesome.
Yeah.
Nothing new to report. The interest rates are still staying pretty low. They're not creeping up just yet. Obviously it can happen on a change on a dime, but right now are even keel.
Yeah, I think I've been hearing in the reading in the trades that reading in the newspaper really that the Federal Reserve is kind of done, I think, stimulating the economy with the low interest rates, and that they're going to gradually start increasing. Is that what you're seeing too? I know that short term and rates and mortgages are two different animals, but they do kind of go hand in hand somewhat, don't they, Terrence?
No, not necessarily. Those actually have nothing to do with interest rates. Those are obviously bank-to-bank interest rates, and those have been, almost none for a little over a year now. But, what directly affects interest rates is the bond market. And, normally that's tied inversely to the stock market. So stock market goes up, bond market goes down, which makes interest rates go up. or conversely, stock market goes down, bond markets go up, which makes interest rates drop. So, that's kind of what triggered the huge drop in interest rates at the start of the pandemic when the stock market, tanked. That's what dropped interest rate. It has nothing to do with the Fed doing their interest rate. Whenever I see a post from someone, oh, the Fed dropped the interest rate to 0, that means I can buy a home for 0%. Like, no, that's not how that works. Happens all the time. It's one of those. It's a huge misconception. My phone always blows up whenever there's something in the news. I heard interest rates are 0. No, they're not.
So look in your crystal ball, Terrence, and tell us, what do you think interest rates are going to do until the end of the year on mortgages?
No. No, no idea.
All right. Well, all right. We're not gonna put you on the spot like that. But I pulled up. Wait a minute now. This isn't the right one. I wanted to first go into. Are you seeing the
price, sold price?
Okay. All right. Here, this is what I wanted to start with, the weekly market snapshot from, this is our MLS service. You're seeing that, right, Terrence?
Yes, I am.
Okay. All right. Good. All right. So we'll just kind of breeze through these quickly. The green is 2020. The blue is the current year. And these are actual closed properties. And you can see this was last year during the pandemic, the green. But then you can see that in 2021, we were actually ahead of last spring's lockdown. I mean, this was our spring market, but you can see that after we opened up again in June, how in 2020 we overtook the 2021. I mean, not necessarily though. We had an amazing spring market this year, which you can see here. But last year we were actually ahead of where we are this year. I mean, things really quieted down. This is probably here's Memorial Day back in here. And it kind of went down, but then it picked up again. And then, it's kind of interesting, right? And to be expected, I think that last year we had a hotter summer market than we did this year. I think the spring market was just so hot, and you can see that in this graph here. Again, these are properties not actually closed, but properties that went under contract. And here you can really see how our spring market was just crazy. But now it's leveled off, and we're pretty much on a par with what we were doing last year in terms of properties going under contract. New listings, right? Sellers got in on the action in the spring this year. And
it surprises me considering how everyone is complaining about low inventory.
Well, it's still, and I'll show that in the info sparks, but we were locked down for the spring of 2020, and now we're back up again. But you can see in 2020, the green bar, that after we opened up again, sellers did jump into the market and put their properties on the market. And it was pretty steady from this point on until Memorial Day, essentially. And now we've been pretty, anyway. These are rented listings. I don't deal with a lot of rented listings. Open houses, pretty predictable, I think. Labor Day and Memorial Day, 4th of July, we're down. Weekends, obviously. But and these are the showings. And what I find interesting about this data is the navy blue line. You can see clearly when we locked down. That was 2020. But other than that, even the trend line though in 2020, once things opened up, there were more showings, but we still followed the same trend line that spring market and gradually petering out until the end of the year and then starting to come back. I mean, you can see at the beginning of 2020, we were starting to have a really hot market. I mean, look at that curve at the beginning of 2020, and then all of a sudden, boom, gone. So I found that a really interesting chart. And then, oh, I love this chart too, the sold prices. And again, you can see that the prices are up 21 over 20. But look at this bar graph up here. Now the difference between the two, the line graph and the bar graph is that the bar graph is the median sales price and the bar graph is the average sales price. But look at how they've come together here. I mean, prices were way up in the spring, 377 over 2. I mean, that's like an $80,000 differential here in the spring, and now we're, pretty much on a par. They come down quite a bit, and well, not quite a bit, but they've come down. What is that, about not quite 10%, huh? 380 to 350. Yeah, I mean, not quite 10%, but kind of an interesting chart, I think. Let me go to the InfoSparks. I set this up to go back all the way to the beginning, 2008, when they started keeping this data and talking about sales price. Let me look at that chart. But look at how. I mean, we were starting to, here is our kind of winter doldrums, and we were starting to pick up, and then we locked down. Here was when we locked down last year, and as soon as we opened up in June, boom. So we went from 272 median sales price to 322. So what is that difference? That's about a $50,000 difference there, huh? I mean, yeah. That's what, close to, that's about not quite 20%, a 15% increase in sales price. I mean, it's amazing. And look at what the market times have done. Something though that, I want to go back to this a minute. Here's what I wanted to point out. This was right before the market crashed in January of 18. And people who say, oh, we're in a bubble, but look at how long it took for us to come back to that point. I mean, it was just last year August of last year, before we even hit that point again. And so I think the point that I want to make is that we've got, what is that, like 12 years of price appreciation to catch up with. And other markets, particularly the coasts, of course, they came back right away. I mean, they haven't had the long comeback that we've had. So I think that Chicago is still a very affordable, in the big scheme of things, in the national picture, is still a very much affordable market relative to the coast. I mean, there's no question about that, I don't think. You got any thoughts on that?
I agree.
Yeah. Number of homes for sale. Did it come up? Yes. Number of homes for sale. Well, this is what we're talking about, the inventory. I mean, look at this drop in inventory. And properties under contract. See, this was our spring market. Started coming out. And here's our little doldrums here. And I imagine that's only going to continue to climb. And the closed sales is more of a lagging indicator. But this is July of 2020. Here's where we locked down. Wait a minute. Here's where we locked down. And here you can see where it dipped. And then it's been, a lot of people making a lot of changes. But here's our little plateau here for the summer. Anyway, I think that the charts and graphs that I love, that Wes hates, I think certainly bear out what we're seeing out, kicking the bricks and feet on the ground kind of experience. So
Yeah, all the numbers line up and match up, which is great to see.
yeah. So I mean, I guess my thought is it's kind of a unique market in that we don't have enough inventory. There's still a lot of demand for property.
Right.
We have this little window of opportunity, I think, before the end of the year, before Thanksgiving, to get, if you have a property, you need to make a move. I think we're going to have a busy fall market. But
Agreed.
it's unique in that there's not much inventory, so it's a good seller's market, but it's also a good buyer's market in that prices have softened. Interest rates are still excellent. You can, yes, prices are up, but because of the low interest rates, you can afford more. I don't know. Did you have any thoughts on that, Terrence? Like, if you
I'm just nodding in agreement. You are hitting all the nails in the head right away.
Okay. All right. Well, I think that's it. So if you have any questions or you'd like some further information from either Terrence or myself, feel free to reach out. We want to keep this short. I know charts and graphs are not everybody's thing, but I love them. And, I know that Terrence is a number cruncher too. And
Definitely.
We'll be back next week with Wes and I chewing the fat on something. I don't know what, but we'll get back on our regular routine, and we'll be back with Terrence next month for a new monthly update. So
definitely.
Everybody have a good week, and we'll reach out if you have any questions, and we'll talk to you soon. Bye for now.
Thanks, Mary.